Morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is August 25th, 2022. Jackson Hole Symposium starts today. Finally, we get Fed Chair speaking tomorrow at 10 a.m. and other Fed officials speaking here today. So let's take a look at the markets from a technical perspective. Stay tuned. Before we get into the markets, the GDP did come out a little bit better than expectations, minus 0.6 versus minus 0.8. The core price data came in unchanged at 4.4%. And we also saw initial jobs claims come in stronger than expected at 243 versus 253 expected. That keeps on trending to the downside. This week's initial jobs claims report, and continuing claims for that matter, corresponds with the BLS survey week. So it may be a prelude for another strong jobs report coming out in September. We will see. Let's take a look at some of the markets with the euro versus US dollar. We saw better data come out of Germany, but it's still lower data toward the lower end of recent history. We saw the euro versus US dollar spike up on better than expected GDP out of Germany. We also saw IFO data come out a little bit better than expected, but after the GDP number, the spike up to parity 0.32 or 1.0038, let's say that, took the price near the high price for the week, near around the 48.49 level, but the price rotated back to the downside. As you can see, over the last 6 or so hours, the price action has taken the euro versus US dollar back below the 100-hour moving average at 0.9978, also below the parity level, which is roughly this area right through here. You can see how the market moved below that level, tried to trade above and below it, and then start to use the parity level as resistance in the last 3 hours to the downside. Again, we've seen the price move below the 100-hour moving average at 0.9978 for the trading week. Fairly narrow trading week. Our low was reached on Tuesday, down at 98.99. Let's call it 99. Yesterday's low price came down toward these swing lows from Tuesday's trade. It's all like in the minutia here for this pair, and then found quick buyers that took the price up to the 100-hour moving average. So the break above the 100-hour moving average was met by increased buying into the data, but now that break above the 100-hour moving average, which held here, and here, is failing, tilting the buys back to the downside for that currency pair. Let's take a look at the dollar versus yen. This currency pair also up and down price action in trading this week. The low price was reached on Tuesday, and the high price was also reached on Tuesday. Yesterday we traded within that range. Today we're trading within that range. Yesterday we traded above and below the rising 100-hour moving average. Today we traded above and below the rising 100-hour moving average, but most of the all of the European session has been below the 100-hour moving average. We did see a move back to the upside, maybe helped by the better jobs report, moving closer to the 100-day moving average at 136.958. We're going to need to get back above that level. It'll tilt the bias more to the upside. Sorry that the price is waffling back and forth this week, but that's what happens in markets where lots of uncertainty, both domestically within the U.S. and overseas. The general bias for the dollar versus yen is to the upside as central bank policy diverges between the Fed and the Bank of Japan. Nevertheless, we have to respect the technicals, and being below the 100-hour moving average keeps the bias a little bit more new to the downside, but neutral, because we are still above the 200-hour moving average. And notice how the 200-hour moving average is moving up to the low from this week's trading. So that increases the level's importance on further downside. So 100-hour moving average above, 200-hour moving average below. That's our wide bands. If we move above or outside of that range, then we look for increased momentum in the direction of the break. Could see also sellers against the 100, could also see buyers against the 200 as the market remains within its borderlines or boundaries or bookends, or however you want to put it. So that's the dollar versus yen, neutral, but with the 100-hour moving average more in play. Let's take a look at the sterling versus US dollar, and I take a longer term view of this because yesterday market came down, tested the swing low, the old swing low from July 14th, recall that earlier the week the market did trade below that level on our way to most recent low 1.177163. It was the lowest level since March of 2020, start of the pandemic. But we reestablished support near that 1.17594 level yesterday and started to move to the upside. Now I'm going to take it off that burn here, take a closer look here. And we today we moved above the 100-hour moving average. That was a key break, just like the euro versus US dollar moving above it, because we held it here. We moved above it here for one single bar. We held it here, very similar to the euro dollar chart, if you recall. And we moved up not quite to the high that we saw on Tuesday. Again, very similar to the euro dollar chart. And now we're moving back down toward to retest the 100-hour moving average. The market did test that at 1.181045, and we bounced back up to 1.1818. So traders are respecting that 100-hour break and trying to hold it. Okay, the buyers are making a play. It's their turn. If they want to keep the price above that level, that would keep the buyers in play for a potential move to the upside. If it moves back below that level, disappointment for that currency pair. Quick look at the dollar versus Canada. We are back up testing this swing area and also the 200-hour moving average key level. We tested the 50% retracement on the downside. Nice hold right there. Now will the 200-hour moving average hold? And taking a look at the New Zealand dollar, that currency pair moved up through the 100-hour moving average, saw momentum up toward the 200-hour moving average, which is declining. So like the dollar versus yen, which is trades between the 100 and 200, so does the New Zealand versus US dollar. Good sellers or sellers up here kept a lid on that pair. And finally the Aussie versus US dollar, we did move up toward the 50% retracement of this move to the downside and found sellers. We are above the 200-hour moving average in this currency pair, which gives it a little bit more of a bullish bias. At least the buyers are making a play in this currency pair. Can they keep control? Got to stay above the 200-hour moving average. My name is Greg Michalowski. Hope you enjoyed this report. If you did, give it a thumbs up. If you didn't, give it a thumbs down. Good fortune with your trading. Bye-bye now.